Hey guys, welcome to episode 5 of my YouTube series. I guess this one's a little bit different because we're going to be looking instead at a special situation and specifically on Siri. Going to try and go over like all the things that led up to it and explain what the whole situation was with Liberty Media. I'm sure you might have seen the article, and it was quite confusing to understand. I'll be going over that timeline and then my thoughts on the squeeze and an actual short that it gave and going over the chart. All right, so first off, you have to understand what Liberty Media is. They're like a media company, really, and they own stakes in Formula One, Sirius XM, Live Nation, and the Atlanta Braves. This is Siri, and this is LYV. Okay, and so what they did is they created tracker stocks, which reflects their ownership in the different businesses. So you have LSXMA, which is the main one we're interested in, like these ones here, but we'll just look at the Series A. Then you have Batra, which is for the Braves, and then you have the Formula One. Okay, this one is for LSXMA is for Sirius XM, Siri, and Live Nation, which is LYV. Yeah, so here's kind of where I go over what I just said about the different holdings in each of the tracker stocks. Okay. All right, so I'm going to be going over the timeline. So the main thing you have to understand is LSXMA has had, on average, over 30% discount to its NAV for years. So NAV stands for net asset value, if no one knows that. And basically, it's like saying, their holdings in the two companies are worth $10 billion, but the stock trades at $7, okay? At $7 billion, okay? So that's kind of what I mean by the discount. And, because of that, it was a quite popular arb trade, with how many, like how liquid it is and everything for a lot of funds, to be long LSXMA and short Siri. Now, the reason why you short Siri is, let's say Siri goes bankrupt or you think it's overvalued, just kind of protects any downside on LSXMA, hoping for that discount to NAV to close, right? And we're going to start looking like at the end of 2020. So, and then we'll go to the next two steps. So by then, it was at a wide discount, and concerns were that Liberty Media would not be able to reach 80% ownership threshold, and there's troubles for the media industry during COVID. Now, quick thing on this 80% ownership threshold is, yeah, you might think, oh wait, I thought majority was 50%. Well, supposedly from my research, if you're at above 80%, it just makes it a lot easier to control the board. And with that being said, if they were able to get above 80%, then the consensus was that then they would then be able to increase the dividend payout at Siri and use that to buy back more shares, right? So, one theory for the discount was that, they weren't going to be able to get to that amount, and if they don't get to that amount, then they're not going to be able to buy back shares, so the discount won't go down, right? Other one is that, Siri is overvalued, and that was reflected not in Siri stock price, but in LSXMA stock price. Another one is Live Nation, the other holding in LSXMA was struggling during the pandemic, and they would potentially have to issue equity, which would just dilute the stock. And it's very complex, and I think anything with uncertainty and complex can be mispriced. All right. Then fast forward 2 years pretty much, and in November they announced a split-off proposition. Okay, so at this point they already owned 83%, and that's above that 80% threshold I was talking about. LYV, I'm pretty sure, stayed the same, but nothing really happened with the discount. It pretty much stayed very, very much the same, and all they did was some small buybacks. So for them, it's in their interest to tighten that spread down, and so what they did is one of their solutions was a split-off. And I'll just give like a quick summary. So basically, the Atlanta Braves tracker stock Batra is going to be split off, and they're going to make a new company, holding company of all the Braves businesses and their subsidiaries. I'll show a graph here, and we'll go back. So that would just become that. We'll go back to number 2. It's not in the right order. And the proposal was also to create another tracking stock, which would be Liberty Live Group, and that would track LYV, which is Live Nation. Okay. And with that being said, LSXMA, as a result, would only track Siri holdings. Okay. And just a quick demonstration. So at this time, like I just did a rough calculation. It could be off by a couple billion or a couple percent. So they were at around $21 billion for the market value of their shares in Siri and LYV. but LSXMA instead was trading at a $40 million market cap. So that's like what I mean by the discount to NAV, okay? That difference from 21 to 14. And that's why there's a lot of funds involved in this arb trade. So here's a graph. So LSXMA, as a result, would become one company. And that just makes it a lot easier to calculate like what it's worth, right? So all the uncertainty between having two and LYV and their problems, etc. With that being said, you'd assume the discount would minimize. All right, and then on July 18th, so a couple of days prior to the squeeze, I think 3 days prior or 2 days, they announced that they approved the split off. And the main thing I think to think is it's not really SIRI that's at a mispricing, it's more LSXMA, right? So for these funds, knowing that the NAV discount is likely going to minimize after the split off is complete in August 3rd, that discount would likely go lower, and so they'll benefit from being long LSXMA more than they would being short SIRI, right? That short SIRI was more like just to protect them from for over the last couple, years or whatever, in case any bankruptcy risk or, that, value of that stock coming back down, etc. Right? And at this point, you might as well long LSXMA, right? Because you're getting a discount to SIRI shares. Okay, so with that being said, when the stock has 32% of the float being short, 220 million shares, and the average daily volume is only 20 million, that's a lot of volume that they would need to do to cover those shares, right? I mean, it would take them at least 11 days, assuming they did all the shares, which everyone knows is impossible, right? So as was approved, SIRI, I can show you the daily here. These 2 days here started trading up, and you can assume that's some funds likely front running their covers, because now we had a deadline, August 3rd, I think it was. I think I mentioned before. And, it's just, one front running the other because they know this like they don't have all the liquidity for everyone to cover, and that was it. And then on 7/19, so on that second day, which I showed you, in the after hours, Barron's put out a news PR, or put out like an article pretty much announcing, the potential for this to squeeze. And, that was that. Then, more market participants become aware of the situation. Some funds who are probably, not in the best position might start getting nervous. And, yeah, the next day we got the squeeze, right? And that's pretty much it. So hopefully that explains like the reason why this got a squeeze is not for anything significantly new. It was more, in my opinion, just, lack of liquidity and a less interesting arb trade, right? So I would not say they were forced to cover, but it wasn't that interesting to be in this arb trade anymore. You'd better off just be long XMA, okay? And so we got the squeeze. I mean, the volume was insane, and I think key things here is, you get that blow off move, volume's the highest, makes sense. You pull into V up, but the volume stays really steady. Then into that close, you get that large ramp up in volume again, and then you kind of get a blow off move. To me, that signifies that the main fund or whoever, the main 1 or 2 or 3 guys that were getting squeezed out on covering are likely trying to get all their covers before the close, right? I feel like I've seen that a couple times now, and that's just my best guess. And then the next key thing I would say is the next day you get that gap down and weakness into the open. And I think that's very key, for a stock that did that much volume the prior day, and it's this thick, that the blow-off move likely already happened. And I think the next step that kind of really confirmed that is 20 minutes in, the volume just completely like died off, like even half on a day 2 after one of the biggest volume. I think was it the biggest volume day? Whatever it was, like. But you see that volume just completely died off super quick on a day 2 after an insane move. And you'd imagine if any other funds or like big funds were really screwed, that they would, be taking all the liquidity they can get straight away after day 1 and covering off the open. But, to me, that just shows that, whoever had to cover with that blow off move and volume ramp into the close of prior day, likely probably already did. And the next key thing I would say is, most funds that probably took this arb trade, I would assume would not allocate all their risk and capital to this, right? So, if it goes up from 5 to 8, they're probably not going to blow up. They have zero incentive to cover unless it kept going up and up, right? So for them, when this pulls back like 5% from the highs, they're not going to be on the bid there. They're going to be waiting for this to come all the way back down. So I just think it's just one of those other mechanics, right, where there's no natural buyers. It's different to like a parabolic small cap, which goes up from 1 to 10, then pulls back to 8. It'll probably retest higher. It's shorts will preemptively cover. I think it's a little bit different when the main shorts are funds who are likely fine to just wait this out for a couple of weeks and hold it back down. And then, so yeah, that volume died, and then even after this ramp above view up, I mean, at 1 p.m., look at how low that volume was. It was just like trading what it was prior to the squeeze out, and not really going higher. And I really think that the only reason it kind of even closed above view up is because you had those record options traded the prior day, and it's just a max pain for everyone who's bought and sold options or puts or calls, whatever, the prior day. So I think that was that, and I think a very key tell is just the next day. Friday's over, come Monday, gap down, and finally just easily hold under key levels and just have a really clean unwind. So to me, I think when you get that big move, blow off move, next day holding weak volume died, you can really, on something that is this thick, you can really bet that the high is in on day one. This being day one, sorry, and put short against that. And I think as time goes on and this starts holding lower and lower, you can really just scale that. I think it's one of those like asymmetric bets that you can be like, okay, there's probably a 90% chance that the high is in and it won't get above that. And just a quick other example, this Lucid, when we had that fake acquisition rumor news, when you get a move like that and that much volume, and then next day, holds lower and then volume dries up, it just would take an enormous amount of volume and recatalysts and whatever for this to even get closer above, and you can just kind of see it just like stayed sideways. It didn't even attempt to go higher, apart from the pre-market where it just got slammed straight away. So yeah, I would say that was probably one of the better ops of this month, and hopefully this video made the explanation of why the squeeze even happened in the first place make more sense, and why that was a really good swing short. And I guess there was also if anyone was prepared, it probably was a good long after seeing the split off date was announced. But yeah, any questions, let me know, and if I got anything wrong as well, let me know. Thanks.